Hey traders, what is going on? Welcome back to another review. This is the third week in the community and we had a really good week this week. Let me just open up our Telegram here. Okay, so we can see as I tallied up all the trades that we actually were able to take, we took about 10 trades, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and we had 7 losers and 3 winners. But with our risk to rewards, we were able to come out with a dub on top, and still be able to gain 18.15 R. So that is still marvelous, and we still managed to gain 116 pips. Total, with the total 3 weeks that we've been running the community, we're up 25 R basically. Nonetheless, I do want to say at the beginning of this video, at the end of the month, the last Saturday, as I wrote down here, I will go on YouTube and I will do a whole live stream, so we can just review the trades, let's see the trades that we missed and everything just like that. Definitely want to stay tuned for that because there will be some special things in there, okay? So our first set of 3 trades were on different pairs. I do want to just go to focusing on, I have some selected pairs, GA, GU, GJ, and gold. I want to just focus down on these pairs just so I'm not doing too much. I'm not sending too many signals and bombarding you guys with too many messages. But let's just start at our first trade on EU, GU, and Canadian yen. Let's just go to... Okay, so this is how we started into the week. This is EU. We've seen a position from the swing low to swing high. We have our FIB projection, and we decided to get in our entry right when the market opened, just about an hour after at the E2 level, okay? Our stop loss was placed, and everything was just fine. It was at least a risk 1 to gain 3, so that is good in our favor. Then we went out and we actually sent this position, which is opposite basically to Euro USD, which is all fine in correlation and everything just like that. And that is good indication to why we lost all these 3 positions, because they were correlated by certain things like the US dollar and the JPY. Something you need to take into consideration. If you don't know much about market correlation, be sure to check out the other videos that I have on the channel regarding all this regarding these important topics. Okay, so we have our entry placed at the E1 level. Stop loss is placed just above the wicks of these relevant levels as well, and this was for a risk 1 to gain 3 ratio as well. Okay, as we go on to the next position, we've seen this whole setup for pound JPY, and as you can tell, all these setups are the same. Okay, we're always looking for the same thing. Last week was a bearish week, so we went in and we're just looking to get our position at the E1 and E2 levels and continue downwards in the same direction as last week. Okay, you want to know what these E1 and E2 levels are? Get the 7 principles of trading, because that's what we're talking about. That's where we're going into the philosophy, the detail of these numbers, and why these things have importance. Okay, and what is the actual fundamental of trading the financial markets, and that is market orders. Okay, so one thing that I want to note on as well is these trades are originally sent on the 4-hour time frame. I do go through later in the week and switch it back down to our day to our day trades or intraday trades. Sometimes the trades are carried over. But even this one on Canadian JPY, high to low, right? This is one candle, but this still does count as the swing high to the swing low of this swing right here. And then we have our E1 and our E2 projections. Stop loss is always going to be at the candle high of this candle here. Okay. Next, we basically can see that our USD JPY trade was the next one to get activated. And we have just about, I think this is a 33 pip. These numbers are a bit displaced, but the numbers are right. So we have about a 33.8 stop loss in pips. And then our TP is about 108. So we at least get the risk 1 to gain 3 there. Okay, here we have the same thing. CAD JPY gets activated and we have a stop loss of about 14 pips and a TP of about 158. Okay, so those things are really good. Those things are on our side, but still we went through and took a loss on CAD JPY. Normal. These things happen. Okay, this is part reason to why we have those risk to reward ratios, why we have those risk 1 to gain 3, because we know that we can sustain losses and we're already trying to make up for those things in our risk rewards and having an edge in the market. Okay, always repeat your edge and know what your edge is. Here we go through, we lose Euro USD trade as well. So the first 3 trades that we took were losses. Okay, this is a discouraging thing, this is a misleading thing as well. Okay, at some point in time, as a trader goes through these losses, you might think, man, my plan doesn't work, something isn't right, maybe I should change something, do I change pairs? No, we just continue with the same plan. Okay, so here we have our USD JPY trade also gets hit out as well. So we have to know we just took a trade on Euro USD, CAD JPY, USD JPY, and Pound JPY. All 4 trades lost. Okay, then we have another opportunity on Pound Australian, but this one's on the 30-minute time frame, and this was when I just seen it right at the E2 level. So this was sent as a market order, and our stop loss 20.8 pips right at the swing high. Okay, TP right around here, and I believe this one here was for a, judging by my math, 114 can fit 20 in it about almost a full 6 times. So I'm gonna say our risk to reward was 5.8, or if I remember correctly, this one here, our risk to reward was risk 1 for 5.45. So this one came through. Okay, then we can see the next thing that we did was, as we were coming down to this area, I then moved our stop loss down to just break even, basically cover my position, and then we were just holding to see how price would update. Would it come back up to our stop loss, knocking out our 5.7 pips that we secured, or not? Okay, so as we can see what's going on, we came through, and if you were watching the Pound Australian trade that I sent out on YouTube that we broke down and we analyzed, I did take another trade right where we have these two, where we have this basically an F, marking the E1 level there and the E2 level there. Trade was taken there just to come back down to the downside. You haven't seen that video, make sure you check out that video I posted this week on the Pound Australian. Okay, so this one here, I believe, was about risk 1 for 8. And this was a marvelous trade. We went from the E2 level straight down to the E1 level. And yeah, this trade basically took almost about a full 2 days. But nonetheless, this was a marvelous trade. We gained 4.5 R on that one. Here we have Australian. Here we have the Pound Australian again. Same type of setup that we're looking for. And knowing that we're doing this on the 30-minute time frame, this one here is the Pound USD. This one here is the Pound JPY. Same type of setup at the E1 level. And then we also set in the E2 level just to be prepared in case our E1 level trade doesn't work out. Every opportunity we get with this fib strategy, we're going to get 2 opportunities on each swing. Okay, that is going to be opportunities at the E1 level and the E2 level. Okay, let's move on to the next graph that we have here. So Pound JPY, we trigger into our E1 level. Okay, you can see we basically start out with everything still intact. We have different TPs, which is to take note of. Okay, if we're at the E2 level, our TP is going to be the T1 level. If we're at the E1 level, our TP is going to be the T1. So those two things always go together because those are the extremes of the market. Then we can see our stop loss gets hit on the E1 level. That is life. Sad thing that we lost, yes, but that's just trading. Those are the things that we can't get misled about. Okay, so if you're aware of the 7 principles of trading and how we go about doing that, we basically get another opportunity to re-enter the market on this closed candle here. So that's why I went through and sent this manual trade, market order trade, because even though we just got stopped out, price had closed back in the E1 level, indicating to me that we can still carry this price to the downside. I kept the pending order at the E2 level in because that is also still a valid position. All of these positions are valid, and I'm just keeping them until either the structure changes, making the position invalid, or the stop loss gets hit, also making the position invalid. Okay, I want my stop losses to be tight and get hit So at that point, I know that my trade idea is invalid and my point of error is very close. Okay, when my point of error is very small, I can risk a lot in that small area. Okay, let's move on to the second one, and this is basically where I explain how we can get in on a re-entry. And then this is the same pound JPY trade. As we closed by the mid area, went through, updated our stop loss right to the S area. You know, all these areas are identified in the 7 principles of trading. That's where we get into the details and the philosophy of how we're using the strategy. On to the next one. So here we have the pound USD. The picture's a little messed up, but what we basically have here is from the swing high to the swing low and the E1 level marked off. Stop loss, always looking left, and at the swing high. On to the next picture is still going to be the pound USD, and we can see the structure a little bit better here. Swing high to swing low, E1 level gets triggered. Then our stop loss, like I said, was just right in the right area. T1 level, E1 to T1, and we have a 7 pip stop loss. So basically we have this one that we have set. This one gets its stop loss hit, so we lost about 8 pips on that. Okay, then we have another limit order set at the E2 level, which this is the perfect trade that we took for this week. And our risk to reward on this one was risk 1 for 11.4. Very, very beautiful trade. We are about to 10x our reward, that is versus our risk. So as soon as we tip into that trade at our pending order, we immediately fall and we cover our position as we have price closing down lower and lower. Okay. Same thing that we do, we see another opportunity on the pound Australian. I go in to set in the position. I will admit maybe the wrong thing to do here was setting in the position at the start of setting in the position as the new day was starting, given that the spreads will increase and things just like that. And it was for this reason that we went through and we actually lost these trades. I remember on the pound Australian. The spread just got really high and ended up taking these trades out. Okay, then we're back to the pound USD. Price continues to close lower and lower below our important significant zones. So we cover more of our position as price does that to secure more for ourselves, taking good risk to rewards and securing the positions as they move towards our profit areas. So this one, we get ticked into our E2 level, okay? And this one is basically our trade on pound JPY hitting our TP, which was beautiful, okay? And then this one here is our trade on pound USD, right from the top, following right down to the bottom. Our TP is not hit yet, as I mentioned. If we're going from the E2 level, we have to be going down to our TP at the T1 level, okay? And then basically we have, because of the spread, our E2 level trade on the pound US dollar, on the pound Australian was hit out. But those are normal things, you know, we sustain losses sometimes, but that's why we went through to make our losses small and extend our take profits at least 1 to 3. And then this was our final TP that was hit on the pound US dollar. So I do want to say in the beginning of the week, around Monday and Tuesday, where there were some missed opportunities on GJ and GU, but those are natural things that we all must account for in our trading plan. I emphasized this last week, just to understand that our trading plan, our total results, when you guys backtest and calculate what these numbers are, these things should already account for missed trades, or, you know, because people are busy sometimes. So sometimes you'll miss trades. Sometimes you'll get stopped out of trades. As you've seen, we've got stopped out of some. We've had to take re-entries. All these things need to be calculated in your plan so that when you add everything up, and if you go back to some of those other videos on the webinars, I go through and explain the 2 important factors to tell if you will be profitable is what is your win rate and what is your risk to reward ratio on your trades, okay? That is all I really want to say for this video, guys. Thank you for tuning in. As we going into the next week, a lot of these pairs are continuing weak. So GU still going to look short. GJ still going to look short. GA still going to look short. And then for the last Saturday in this month, we will be doing the review. We're gonna go through all these trades, see what we missed, all those type of good things, all the really weird trades, just a good learning experience to see how we're trading and everything like that and fully understand. That's all I gotta say for this video, guys. Thank you for tuning in. I'll catch you guys on the charts.